June 2025 global markets stunned by sudden Vietnamese dong revaluation. Welcome back to my channel, Iraqi Dinar RV. In a world where financial surprises are increasingly rare, June 2025 delivered a shockwave few could have anticipated. The Vietnamese dong, VND, a currency often labeled as exotic and undervalued, was abruptly and dramatically revalued, moving from a long-standing rate of approximately 23,500 VND per USD to just 1,200 VND per USD overnight. This wasn't a market fluctuation. It was a calculated and coordinated currency reset that caught the global financial system off guard. Without a single press release, media hint, or central bank bulletin, the change was implemented across the world's financial infrastructure. At precisely 24:33 GMT, banking networks in multiple countries began reflecting the updated rate. Major institutions including HSBC, Citibank, and Standard Chartered saw their internal systems update in real time, sparking disbelief among Forex traders, bankers, and retail investors. Overnight wealth surge screenshots and video recordings began to flood social media, showing account balances and trading dashboards updated with the new conversion rates. People who had invested in the Vietnamese dong, often quietly and with modest expectations, were now discovering gains that rivaled winning the lottery. The shift was no bug, no rogue algorithm. It was a carefully executed operation, deliberate and exacting in its silence. To put this into perspective, a modest $500 investment previously purchased 11.75 million VND. After the revaluation, that same amount in VND translates to nearly 9,790 USD, an increase of roughly 1,158%. Lifelong savers and casual currency holders suddenly found themselves holding assets worth 10 to 20 times their original purchase value. A silent financial earthquake. Unlike previous currency events that are typically preceded by speculation, economic reports, or leaks, this revaluation arrived like a lightning bolt. Markets weren't prepared, and central banks across Asia scrambled to respond. Within hours, several Southeast Asian monetary authorities called emergency sessions to assess risks and formulate responses. Forex platforms suspended VND trading, citing extraordinary volatility. Many traders were locked out of their positions, unsure of whether their gains would be honored or frozen. Financial institutions, still digesting the new values, implemented temporary restrictions on large foreign exchange transactions. Behind the scenes, it became clear this was not an accident or rogue decision. It was a meticulously staged operation. Controlled rollout strategy. The implementation of the new exchange rate followed a tiered release strategy. Large institutional clients and private banking customers were reportedly informed and able to transact at the new rate before it reached public-facing platforms. ATMs, mobile banking apps, and customer portals lagged behind, creating an uneven rollout. This staggered dissemination appeared intentional, designed to prevent mass panic, control liquidity outflows, and give financial systems time to update protocols. Insiders from several U.S.-based banks noted that back-end systems had been quietly updated in the months prior to accommodate exotic currency tier shifts. These cryptic upgrades, unnoticed by the public, now appear to have been preemptive moves in anticipation of the dong's revaluation. IMF's cryptic confirmation hours after the update, the International Monetary Fund, IMF, issued a vague but pointed statement referring to the realignment of certain regional currencies due to evolving macroeconomic indicators. While the statement did not explicitly mention Vietnam, its timing was unmistakable. Observers concluded that the dong's reset had the blessing or cooperation of major international institutions. Adding fuel to the theory of a pre-planned event, Vietnam's own government websites, especially those of the Ministry of Finance and the State Bank of Vietnam, went offline within an hour of the currency shift. Archived pages displaying old exchange rates were quietly replaced with generic notices. A bulletin suspected to have announced the revaluation briefly appeared online, then vanished within 20 minutes. Why revalue now? Economists have long contended that the Vietnamese dong was undervalued. With one of the fastest-growing economies in Asia, Vietnam has seen explosive growth in manufacturing, exports, and foreign direct investment. Major trade agreements with the European Union, China, the US, and ASEAN nations have supercharged its economy, especially in tech, garments, and electronics manufacturing. Yet its currency had lagged behind, trading at a rate that many analysts argued no longer reflected reality. The revaluation was more than a surprise. It was, in a sense, an economic correction long overdue. By revaluing its currency, Vietnam appears to be signaling a new chapter, one in which its national currency accurately reflects its place in the global economic hierarchy. This could also be seen as a test. If one nation can successfully reset its currency without destabilizing markets, others might follow. What this means globally. This wasn't just about Vietnam. The dong's dramatic move is now seen as a test case for wider currency resets. Other nations with long suspected undervalued currencies, such as Iraq, Dinar, Venezuela, Bolivar, and Zimbabwe, dollar, have been the focus of revaluation speculation for years. Banks across Africa and the Middle East have, over the past year, quietly upgraded internal infrastructure to handle flexible currency recognition and dynamic exchange rate APIs. These seemingly routine tech enhancements may have been preparing for a wave of future recalibrations. Immediate action steps for dong holders. If you currently hold Vietnamese dong, here's what to do now. 1. Verify authenticity. Ensure your physical notes are genuine, undamaged, and clearly legible. Any signs of mold, tears, or fading may delay validation. 2. Use professional language. When contacting your bank, avoid speculative or slang terms like RV, revaluation. Instead, refer to foreign currency exchanges or foreign asset appointments. 3. Watch for private notices. Banks may contact you through subtle updates labeled Client Rate Advisory or Foreign Asset Review. Monitor these closely. 4. Avoid third-party offers. Be cautious of individuals or unlicensed groups offering to exchange dong for inflated returns. Stick with verified institutions. 5. Document everything. Take screenshots, log correspondence, and retain transaction records in case verification is needed later. Markets bending, not breaking. Despite the scale of this change, the global financial system has largely remained intact. Yes, there are delays, verification loops, and appointment backlogs, but the infrastructure is holding. Many banks have introduced short-term restrictions to mitigate fraud, but the overall system is adapting rather than failing. This strongly suggests the move was not only planned, but rehearsed within controlled environments to ensure minimal fallout. The domino effect across Southeast Asia. Vietnam's bold move could spark a regional chain reaction. As the dong appreciates, Vietnamese goods become more expensive, pressuring countries like Cambodia, Laos, and Indonesia to adjust their own currencies or trade strategies to remain competitive. Multinational corporations based in Vietnam are also now reassessing salaries, procurement contracts, and balance sheets. Overnight, their operating costs and accounting structures have shifted dramatically. Final thoughts. The revaluation of the Vietnamese dong wasn't just a currency event. It was a geopolitical and economic milestone. It reflected the culmination of years of growth, strategy, and quiet international alignment. And perhaps more importantly, it showed the world that such a reset is possible. Now, with the financial world watching closely, the question isn't if other currencies will follow, but when.